Hello and welcome to Switzer TV Investing. I'm Peter Switzer. On tonight's show, we look at what stocks Julia Lee anchors her portfolio with and what she likes right now. And then Tom Waterhouse gives us his tips for tomorrow's Melbourne Cup. Tom has a good record with the Cup on this show, so let's just hope his analysis is still on the money. Last week, Michael McCarthy tipped Pilbara Minerals, which has now surged 20% since last Monday. Julia tipped Domino's last week, and it has put on about 2%. And the week before, Rudy Philippek Van Dyke gave us Nearmap, which put on 17% in the week. These are tricky times, with Westpac announcing today a capital raising and a cut in its dividend, but offsetting this, the more positive news on the trade deal is actually helping stocks. Meanwhile, Charlie Aiken's favourite, Microsoft, continues to trend higher. This huge name in the tech space has put on 44% this year to date. Let's just see what Charlie likes tonight. But now let's just catch up with Julia Lee from Burman Invest. Hi Julia, I said in my intro that I wanted to know what are your anchor stocks in your portfolio. Do you have anchor stocks?
Yes,
I do.
I think when you look at the benefits of diversification, which is one of the most powerful concepts in terms of the market, you really get the benefits when you hold stocks that don't move together, but also you can think about diversifying not only across different sectors, but across the size of stocks, so from large caps all the way down to small caps, and across time as well, so long-term holdings, medium-term and short-term holdings as well.
Very scientific, very good.
So I like to think of the market across those type of things. I guess in terms of the core at the moment, CSL definitely, because of its blood products and the cost. It's been ahead of the curve and it's still riding that success at the moment.
Great company.
A great company. I don't think it's always going to be the case. It's just been ahead of all its competitors and opening up blood collection.
Have you dollar cost average every time it's been going down on a dip, you've bought it, so therefore your collective price for CSL's nice and low?
I like to buy it as it's moving higher and I gain confidence.
So you need the market to tell you it's on momentum up.
Oh, well, if a stock dips quite significantly, that usually tells me, and it usually happens when there's an earnings downgrade or earnings are looking softer or the outlook isn't looking so crash hot. So in those type of scenarios where the fundamentals are still looking softer and the price also reacts to that, then I'm a bit cautious as well, because I do like to invest in companies that are in an upgrade cycle or seeing some sort of improvement. So CSL is a cornerstone one. I guess looking at the falling interest rate environment, you'd have to look at some of the dividend stocks. I have Telstra as well as Sydney Airports in the portfolio as well. And then I guess if you continue along that large cap path, I don't really like the big four banks because of their earnings profile and I like things to be improving, but I do like Macquarie in that space if I had to gain exposure to the financials.
But would you buy Macquarie now? Because it's really high. For me, Macquarie's great. I think I averaged in about $36. I've been around for a long time. But that's a classic one in my portfolio. I can't get rid of it. But one day I might have to if I think the market's going to kill it.
Let me ask you a question. I mean, would you buy CBA at these levels?
No. No, I would a bit lower. Once again, my entry price on CBA was so low because I bought it after GFC. But if it went a bit lower, I probably could buy it.
Sure.
For the dividend only.
I guess if we're looking at the financials, Macquarie would be my pick. Only because as interest rates are falling, the banks find it difficult to grow profitability, as we have seen. And then you start to see that flow-on effect to dividends as well. So look, a falling interest rate environment means that people are repaying mortgages more quickly. And unfortunately, that's a pretty poor profit.
Yeah, I actually noticed that Westpac was saying they've extinguished more loans than they've actually created. Did you see that?
It's pretty amazing.
Isn't it?
And look, we're seeing that all around the globe where we are seeing share price weakness in terms of the banks because of that falling interest rate environment. Once we saw the end to those interest rate falls, that would be the time to start accumulating banks again. But unfortunately, this is quite a weak part of the cycle for
Is there a
banks.
minor in your anchor stocks like Rio or BHP?
The miners, I'm liking gold at the moment, but I'm in and out
You
at
always
the moment.
like gold.
I don't always like gold, but at the moment I do like gold because we've been in this type of environment before where interest rates are falling and there's been talk of quantitative easing. And if you look at gold, there's no cost to carry gold at the moment in a lot of currencies.
Okay, so that sort of covers the anchor stocks. So what do you like right now? Or what do you want to talk about? I always remember this year, I always remember you for Lovisa. That was a company I didn't really know. It was a pretty low price. It's had a great year. Is that a company you still like?
Yes, I still like Lovisa. Look, the last update, and with retail stocks, I like that combination of the store rollout together with strong same-store sales growth. That's the magic combination for me. And Lovisa has that, but its last update, its same-store sales number was positive, but it was weaker than the 3 to 5% targets that it's aiming for.
Yeah.
Having said that, the rollout of stores is very strong, and don't forget that we're coming up to an extremely strong part of the year for Lovisa, which is Christmas time. You know, the teenagers,
when they go into the black,
millennials,
retailers go into black. Yeah.
like to buy Christmas presents from Lovisa. So this Christmas period should be a good one. So we should see that sales trend once again improving. Staying in that retail space, I also like JB Hi-Fi. I continue to like JB Hi-Fi. Baby
Richard
Bunting's
Murray's
still
a
looking
great
great as
CEO.
well. So look, there's a few retailers that I like, especially coming up to that all crucial Christmas season.
How lucky were we when JB Hi-Fi went to $22, $23? What were those idiots thinking? It was great for us.
Its AGM update was good as well, and I guess that's the thing to keep an eye out on is some of those updates coming through, and JB Hi-Fi once again gave a good update.
Okay, and you still like Baby Bunting?
Still like Baby Bunting. I mean, when you virtually have no competition in this space.
That hasn't changed. Like a couple of years ago, it was killing them. All of a sudden, it had rivals and probably some other problems. Share price went down. It's been recovering. I know you're the first person to say to me, well, they don't really have any rivals anymore. And that hasn't changed.
Yeah, no, it hasn't. I guess Amazon could be thought of as a rival, but in terms of a specialist niche market, it's really grabbed that market by the horns. And not only that, it's also increasing the number of stores as well. When I get the Baby Bunting catalogs, I also get emails around, celebrate the opening of this store, and that's also a positive sign. So it's got that store rollout going with the same store sales, and it's got this beauty of increasing margins as well. Its gross margins are improving because it's bringing its house brands into the mix as well.
Okay. I know people would like me to ask you about the wax stocks. You've been an Afterpay fan. Are you still an Afterpay fan?
Look, I'm probably more cautious on Afterpay at the moment, and I liken it to the telecom space. Telstra was a dominator in that space. It didn't have any competition. And once you start to get competition coming into the space, then it makes it for a more difficult business proposition. And that's what's happened in this space. Afterpay was a big mover and a first mover in this space. It had its platform, but now you're seeing a lot of competition coming into that space.
I'm seeing Zip in a lot of stores as well nowadays.
Seeing Zip, and not only domestic competitors, but international competitors as well. So look, I'm a bit more cautious on Afterpay, given that it's not as clear who's going to be the one dominating this area. And the actual fact is we're probably going to see a number of parties dominating this area.
What's your view on WiseTech? It's been copying a lot in the press. It was once regarded as a great company. What's your view?
You know, I'm not a brave investor. I'm a chicken. I'd stay on the sidelines. I mean, we have been through a lot of short reports before in the past, and whether they have eventually turned out to be right or wrong, for a number of months, you do see negative sentiment hitting the stock, and I'd wait for that to play out. I mean, having a look at some of the interviews that have come out of the company as well regarding that short selling effect, it hasn't given me a huge amount of confidence.
And what about Altium?
Altium, I still like the story of Altium. It's probably my favourite one in this space. Altium as well as Xero are looking pretty good at the moment. And really...
Well, Xero does make profit, doesn't it?
It does. And look, I think the data of Xero is extremely valuable as well. And look, I think a lot more companies are going to be data-driven over the next decade, and that's going to be an exciting area to watch.
And last week you mentioned Domino's. I'm going to be interviewing Don May this week. Do you still like Domino's?
I love Domino's at the moment.
I like you eat Domino's. Do you eat Domino's?
Only when it's been ordered for me.
Okay, right. But so you like the company?
Yes. I like a good turnaround story. And look, Europe is turning around at the moment, which is great. We've just been through the World Cup. I don't know how many times you ate pizza, but I ate pizza a lot.
And the Japanese, they're in Japan as well. I'm sure they're eating...
The Japanese story is really strong at the moment, and even Australia is improving. So look, I think Domino's still has upside here, and I like it. I think it's going to be one of the key turnaround stories in 2020.
I know I've been backing Japanese horses, so I've got the Caulfield Cup and the Cox Plate, because I went to a lunch with Gay Waterhouse and she said why she liked Japanese horses. So I took the tip from her.
So why Japanese horses?
She says that they, like the UK horses, are trained in a colder environment and they give their horses time to grow. She said, but in the hot environments of Australia, we build strong sprinters. So that's why we're better at sprinting than staying. So I just took the tip and so far so good. But the point I guess I'm saying is that I often sang the song, I'm turning Japaneser, but it sounds like the Japanese are turning Westerneser, aren't they? They're liking rugby, they're eating pizza. It could be good for a company like Domino's.
I think so. The Japanese story has been a strong one. And yeah, I think Japan will go from strength to strength with Domino's.
Let's get into the building space. Lendlease, do you like them?
Oh, I love Lendlease. Look,
why do you like Lendlease?
I think the development book is outstanding. You have to remember that their book at the moment is about 35 billion, and look, just waiting is about $100 billion worth of development. So look, I think its strategy is going extremely well. Look how well Barangaroo is selling at the moment. And I think that's going to continue on. So that's strong. The bonus I'd like to see with Lendlease is the sale of that engineering division.
Yeah, well, you said you liked Lendlease early in the year, so you got that right. But you always said the engineering part was the worry area and you liked them to sell it. Are they trying to sell it?
They are trying to sell it. It must be difficult to sell, but regardless, I guess what's happened in the last period is there's been no big blow-ups in the engineering space. So we haven't seen any huge write-downs coming through, and that's been a positive for the overall business, but really it's the development part of the business which is really quite impressive for Lendlease.
And Julie, the whole world and governments in the world are talking about infrastructure. And Lendlease is well positioned for that kind of thing as well, isn't it?
Absolutely. Infrastructure, and look, the type of properties they're building at the moment, I think in high demand. One thing to watch is the apartment space, given some of the scandals here in Australia, but on the premium side, they seem to be selling quite well.
Okay, and finally, while sort of in that building space, James Hardie, you've talked about that in the past. What do you think?
I like James Hardie. I don't know about you, but on my street, every second house is being renovated at the moment.
Yeah.
And
You're thinking Gyprock, are you? all houses have Gyprock, don't they?
Absolutely, but look, this is not just an Australian story. It's primarily a US story. And look, the numbers coming out of the US haven't been too bad at the moment. Not only that, one of the major input prices for James Hardie is pulp, and pulp prices have been falling. So look, I think James Hardie is a winning combination at the moment. Keep a close eye that the US figures coming out of the housing space continue to be positive.
Yeah, and building approvals here jumped about 7% last time. And of course, if the Fin Review's right, its headline on Saturday was house prices leading to a building surge, which of course would be good for James Hardie as well.
Yeah, absolutely. Look, I like James Hardie mostly because of the US story rather than the Australia, but over here, I'm pretty amazed at how quickly properties bounce back here.
Yeah. We love property.
We do. We're
Julia Lee, Bremen Invest. With the day before the Melbourne Cup, one of the busiest for Tom Waterhouse, we caught up with Tom on the phone because he's on the fly as he prepares, as I say, for the biggest day of the year, the Melbourne Cup. Okay, so what horses have attracted the money at the call of the card today?
Well, look, I've backed a few. I bet right around the favourites. I didn't want to be on Murder Glace, the Japanese horse. I didn't want to be on Constantinople or Surprise Baby. So I backed a few horses at odds. Backed the Chosen One at 100 to 1. I backed it to win 1.2 million.
Right.
And a horse called Latrobe. I love that Lloyd Williams is just an absolute genius in winning this Melbourne Cup. And I wanted to back it to win $1 million, but I couldn't get the $26. So I backed it to win a few $100,000 at $21. And the horse that they all wanted to come for was Finch. It was the one in the betting that basically they jumped out of trees to be on, and I have to say the other horses in the market were a bit soft and didn't attract the money that I thought they would here at the call of the card.
Now, Tom, we've seen horses, and you should explain this to us, horses that are 3-year-olds in the UK, but they would be older if they were here. They've won the last 2 Melbourne Cups. I think it was Rekindling and Countercross, wasn't it?
Yeah, cross counter.
Cross counter or something like that. Yeah, but there's a horse like that called Il Paradiso. Was there any popularity? Why are those horses getting some sort of age advantage? And did Il Paradiso get any support today?
Look, it didn't get the support only because they didn't bet the odds here. I think the best price they bet was around $13 or $14. I think you'll get better than that tomorrow. But they get the lovely weight advantage, especially these European horses. They're young and improving. Saw with Cross Counter last year, I think it was 6 kilos less. And it just, I don't know if you remember the run last year, but Cross Counter got balked coming into the straight, just let down with just amazing turn of foot with the light weight. And they can do that. And obviously, I think it's got a great chance. I haven't been. I'm not on it, but I think I wouldn't be surprised if it wins.
Okay, so but lately, Tom, lightweights have been winning the Cup. Are the heavier weight horses at a big disadvantage?
No, I don't think so, because the weights are so compressed nowadays. Look, Cross Counter won that race in Dubai after Melbourne Cup. It did run. Was it third or fourth in the Ascot Gold Cup behind that Stratovirus or whatever? It's probably the best stayer in the world. Look, it's a definite chance. I would have backed Cross Counter today if I'd got $15 or $16. They only bet $14 here, and as you know, it's all about the odds. So obviously, it's luck when you're betting once a year. But if you're betting every day of the week and every race, well, if you're not strict about what odds you take, you're going to go broke pretty quick. So it's all about the odds you take and trying to capitalise when the bookies have made a mistake. And they definitely, I don't think they made a mistake with that horse here today. I think it'll be $14, $15 for sure Cross Counter tomorrow.
Okay, and what will start favourite tomorrow?
Look, you'd have to go, and this is coming from someone I want to bet right around the favourites this year. I think it's a race to find value in. But I think Finch was backed off the map here at the call of the card, and I would have thought it's going to start short of the Japanese horse, that's for sure.
Okay, and what does your dad like? I know you always say your father's a pretty good judge.
He's an absolute genius. He's found the winner of the Cup that many times in the last 10 years, and look, he again thinks the wide open race. Nothing. I think if you were trying to find value, the one at sort of over 20 to 1 that looks to have the best chance of the long shots is probably Latrobe.
Okay, and one last thing. How's your tipping business going, mate?
Yeah, great. Look, it's all about discipline. And I think what most people have never been taught how to win betting. And most people lose betting. And what we've given our members is the discipline to stick to a staking plan, wait till when the bookies make a mistake. They don't make many, but wait till when they make a mistake and then capitalise. And the results have been, well, they've been amazing for the members, but it requires discipline. It's not an easy. You're not. There's nothing out there that you can make money easily. You have to be disciplined, and you have to stick to the staking plan, and then we're going to be hard to beat. But no, it's been going really well.
Okay, now I listened to your mum at a grand final luncheon before the Roosters won the grand final, and she said that your father liked Japanese horses. So I backed the winner of the Caulfield Cup and the Moonee Valley and the Cox Plate purely because of your mum's advice. So I'm not going off your mum now.
No, look, she's 100% right, and Robin and her love these Japanese horses. They got into it very early. The only issue with this Japanese horse is it's been found. It was a slashing win in that Caulfield Cup, and look, I think it's short enough. It's got first time tested at the distance. If it wins tomorrow, I wouldn't be surprised, but it's not getting my money at the $9.
Okay, Tom, thanks for joining us.
Thanks so much, Peter. Bye.
Basically, the economic analysis is very interesting, macroeconomic analysis, and of course Peter's very entertaining.
Well, I come every year or twice a year, and I love it because I get so much information, and I run my own super fund, so for me it's really, really good.
It's been very, very informative, and I must admit, some of these share fund managers, they're quite funny, and I think they've made it such a pleasure to be here. So I've loved it, looking forward to doing something with my money and becoming rich.
Got a lot of people like who are very talented people in the industry. We are getting expert at one place, so that's one of the best thing I found it here. And I would like to thank Peter Switzer for organizing this for us.
Just having the exposure into the market and looking at constructing a portfolio, I think it'll be just a great experience. Just meeting a lot of people as well.
Oh, I really enjoyed it because I came really looking for some income stream because it's just not worthwhile for me to keep my money in the bank anymore, and it's given me some really good ideas, the options that are available there. So yeah, it's been really positive.
It looked really interesting about going into investing and more like building your wealth for the future and not just relying on say like an income and stuff like that.
I've always believed in a great line that my wife taught me, Maureen, but she quoted William Blake once, and she said, Blake once said, "Without controversy, there's no progress." And that's, in many ways, the relationship I've got with Paul and the relationship I've got with Maureen as well. In relation to Maureen, I always say, she actually decided to become my life coach, even though I didn't even know I needed one. But without her looking at me the way a Labrador watches a sausage at a barbecue, finding out what I'm doing wrong and actually telling me how I can fix myself up, I wouldn't be here today. So that's why I always say behind every successful man's a very surprised woman. It's now time to catch up with Charlie Aitken from Aitken Investment Management on what he likes now. And I want to start with this question, Charlie. Westpac's had a bit of a shocker, needs to raise capital, it's cut its dividend. Are the banks becoming a buying opportunity, or is it still beware on the banks?
Well, it's interesting, isn't it? I was looking back at the banks over the last 5 years, just a little while ago, and really it just comes back to that old thing I've said 100 times, Pete, Australia for income, international for growth.
Yeah.
Do not expect capital growth from Australian bank shares. The reason you own Australian bank shares are the dividends and the franking credits.
Yeah.
Think about them as like a regulated utility. The Westpac result was pretty ordinary though, to be honest. There's some very ordinary signs in that.
But the banks have been kicked from pillar to post, haven't they?
They have a little bit of self-inflicted wounds there as well in terms of costs sneaking up, net interest margins coming down. It's not all regulatory penalties, right? I mean, if you strip that out, cash EPS was down 4%. So the bank actually went backwards in its profit. The dividend was cut 15%. So, look, I think the banks are okay for income in your portfolio, but unless they can recover to getting earnings growth, revenue growth, profit growth and dividend growth, I do not believe you'll see capital growth, capital gains from the stocks.
All right, so do banks need stronger economic growth and rising interest rates rather than what we've got now?
They need stronger demand for credit.
Yeah.
One of the most amazing part of the Westpac result is that more mortgages were extinguished than new loans they wrote. Now, I have not seen that.
No.
And that is quite a new development. It means that Australians are being prudent. There's many Australians who are paying off their mortgage with low interest rates rather than running out and borrowing a huge amount of money. And
Charlie,
prudent, yes.
You've shocked me here.
Yeah, I know.
Because that number could be a prelude to that household debt to GDP number coming down. Because all the people running around saying, household debt's terrible, but it may well be shrinking before our very eyes.
Yeah,
but we might not see it for a few more months.
But it's the other point is, are we at the reversal rate in interest rates where super low interest rates actually have the reverse effect you think? That people, instead of borrowing money at super low interest rates, actually pay off their debt.
It's a paradox of thrift.
Which your parents' generation would have thought would be a
great
good decision.
Yeah.
And interestingly today, again, the retail sales number showed the first quarterly decline in absolute retail sales since 1991, which is amazing.
Yeah.
So, and 1991 was the recession, as we know. I won't use that word, but this is really
I
interesting.
hope Josh is watching.
Interest rates aren't working. They are driving people to pay down debt and not necessarily spend. And it's very, very clear to me, Peter, as I said, when you always ask me, how would you get more bullish on Australian equities? Well, we need fiscal help.
Yep.
We need the government to cut interest rates or accelerate, cut tax rates, I got that wrong.
Yeah.
And also to maybe accelerate depreciation, things like get things moving.
Yeah.
because interest rates aren't working.
Good point. All right, now that's our philosophy.
No, it's a fact. You can see in the Westpac
so
result.
generalising on banks, and so you made the point.
Look, I think banks are okay.
Yeah.
There were some worrying trends in that.
Yeah.
But the other point is that I will worry about banks if I start seeing non-performing loans pick up. And that would have to be with unemployment picking up. Now, there's actually no sign
And that's
of that.
why we need growth in the
That's,
economy.
there's no sign of that yet.
Yeah.
But unemployment can sneak up on you, and we need more projects, more job creation to make sure it doesn't sneak up on us.
Okay, let's talk about the stocks you like. Now, you've jumped on board Microsoft, as I said in the intro, up about 44% this year. You've liked LVMH, Louis Vuitton, Moet Hennessy. Okay, and that's done well as well. Boeing wasn't one of your great, we don't blame you for Boeing. But what else do you like in the international space? And is there a local stock that you're starting to like?
Well, it's interesting. The US reporting season's been very good, and unsurprisingly, Wall Street's gone to an all-time high.
Yeah.
You know, led by major companies like Microsoft, Facebook, all the usual suspects. Apple's gone to an all-time high. So the funny thing, Pete, is you don't have to go way outside some of the most recognised American stocks or recognised global stocks. I mean, Microsoft had 20% revenue growth, stocks going well. The one I think looks cheap right now is somewhat controversial because it's not everyone's cup of tea. Is actually Facebook. $500 billion company, grown its revenue 30% year on year. Looks cheap at about 20 times earnings. Yeah. Yes, there's a chance of some regulatory, oversight of Facebook and free speech and all this.
And
sort of
Zuckerberg
stuff.
doesn't always make this.
Zuckerberg is not the most politically correct, but he at least he's got an opinion.
No.
But they are taking...
Doesn't help shareholders.
No, but the shares have done well. Yeah. They're up again like 30 or 40% this year.
Yeah.
But he's taking advertising share from every other medium.
Yeah.
1.6...
The eyes go to Facebook.
1.6 billion daily users of Facebook and Instagram or WhatsApp, which is absolutely amazing. Yeah. So it is the way the world communicates now, the generation younger than us. Yeah. And I think that stock actually looks cheap and probably come a bit of a re-rating.
Okay. Is there a local stock you've got your eye on?
No, Australia, I'm just same sort of things. I'm just waiting for my moment in Australia. I still think consensus earnings growth is a little bit too high at the moment. I mean, I think, I mentioned in the report, I'm looking at Goodman Group. I think Woodside's getting interesting down near 30. I think, BHP pulled back a bit further. I'd be interested. But I think Australia's in just a slightly funny space at the moment. I think there's better opportunities outside Australia.
Yep. And
that reporting season in America pretty much confirmed to me that if I can own Microsoft growing, it's a $1 trillion company growing at 20%, and even things like Apple, well, its revenue was flat, but the shares are starting to perform well ahead of the new iPhone cycle and services picking up. So I think it's time to keep it reasonably simple. We don't need a new idea a day, but we also need to make sure we don't catch any falling knives or stocks that are actually value traps. So I haven't got much new, actually.
My last thing, I was surprised, and of course Donald Trump can always surprise you, but I was surprised when he said that he thinks this deal will cover 60% of what he wants in a trade deal. That number's a lot higher than I expected. I thought the phase one would be a 30% or 50 if it was lucky, but I thought...
Personally, I think it's just all garbage.
Yeah.
I mean, it doesn't mean anything. We'll never see any detail
the
on
number
it.
has been used to excite the market.
Correct, but I mean, the more
it
pressure...
Is more than what you
as
expected,
you and I have discussed, the more Trump is under pressure, the more he wants the stock market up. The number one way to get the stock market up is talking back the trade deal, right? Yeah. He's got that worked out, and he's done that well. But in the interim, he's bluffed the Federal Reserve into cutting interest rates twice, and which now looks somewhat premature. So he's got lower interest rates, lower mortgage rates in America, full employment, and now record high share market. So they'll do some deal with China, whatever it means. But I would say that's pretty close to priced into markets. I mean, the market's pretty well aware of where we're at on that. Remember in August, I think the S&P 500 is now 8% above where it was in August. Yeah. So it's gone from worrying about recession and trade deals to not worrying about it. Yeah. So,
but I would still think that the actual inking of a deal, and they wave it a bit like Neville Chamberlain waved the piece of paper, peace in our time. I think the market still will like a signed deal.
Again, as you and I have discussed, this year's going to end well. It's probably going to end on its highs. We've said that for months now. Yep. People are underinvested. People are nervous. Yep. Markets are doing well. There'll be a bit of fund manager FOMO, as we call it, wanting to look more invested for year end. And I stand by our view that the markets will finish well. Yeah. And it may just be that is the final little bit of the catalyst is some little trade deal.
Okay, great stuff. That's Charlie Aitken from Aitken Investment Management.